Hi, everyone. Welcome to the Pro Video Pages webinar and podcast series. Today, I am joined by Robyn Bowles, whom I know from the Connectives, and I want to share about Robyn and tee it up for her to share with you about taking control of your business expenses. Robyn originally hails from Buffalo, New York, and has a bachelor's degree in psychology from SUNY Genesco, a master's degree in industrial and labor relations from Cornell University. She spent almost 25 years in corporate human resources for a variety of organizations, from large international conglomerates to mid-sized companies in niche industries, until she realized that she didn't really like employees and she really didn't like their managers. And she's just kidding, but not really. So Robyn now owns a franchise, excuse me, she now owns a franchise office of Schooly Mitchell in Chandler, Arizona, and loves helping businesses, educational institutions, and nonprofits save money that can be reinvested back into their organizations and missions. And I invited Robyn to be part of this series because I thought that there was an application to take what she talks about doing with her clients through Schooly Mitchell to our audience, which is the small business and solopreneur who's working for themselves or for a small organization, typically selling a service. So, Robyn, I want to welcome you and thank you for making some adjustments to this deck. And I really look forward to you bringing the value to the audience.
Well, thank you so much, Anne. I appreciate the invitation.
Yeah. Well, I'm going to let you take it away and we'll meet up at the end of this.
Okay, sounds good. The theme for the presentation really is about taking control of your business expenses. And one of the reasons I think that is so important is that we see a lot out there, and I know you're out there in social media, as am I. And what you see is a lot of the first three things. How can I fix things? I'm going to hire salespeople. I'm going to increase my sales by doing a new marketing program. I'm going to lay some people off. How do I get control of these expenses? Those are all ways that can have outcomes that are not necessarily positive. You certainly can hire more salespeople. It's going to take you a while to find them. It's going to have some cost associated. And there's no guarantee that you're going to be successful in driving top-line revenue. You certainly could increase your prices. You're going to probably have some customer loss and have some unhappy customers. You can increase your marketing spend. Again, absolutely very valid way to address this, but you're going to take some time to implement it. It's going to take you some cost, and there's no guarantee of success. And last but not least, the way that many organizations solve their cost issues are by laying off staff or consultants. And that is, to me, the worst possible remedy for any revenue issues. Impacts your culture very negatively. You lose a lot of institutional knowledge. And then when the economy recovers, you don't recover as fast. You don't compete as quickly because you've lost great staff. So that's why I think decreasing your indirect costs is the answer to some of your cost or revenue issues. It's a short implementation time frame. There's no cost up front. You're guaranteed to get some result, and it's a sustainable solution that helps year after year. So how do we take control of these expenses that most businesses would have? The first step really is to know what you have. What is the exact product or service that you're paying for? And you may take something like Telecom. That seems like a pretty simplistic expense. I have a business line and I'm charged the following things. Do you know, though, exactly what services come along with that? Are there insurance-related costs or technology or hardware expenses that come with it? So the first step in taking control is really understanding what product or service you are paying for. The next step is to say, what do I have in terms of the terms? What are the terms of this agreement? Things you're going to want to pay attention to are ETFs, or early termination fees. Well, what if I find a great deal with another vendor? You're probably going to have to pay the current vendor an early termination fee to get out of that contract. What is the length of your contract? Auto-renewal, you'll see bolded, because that is something that a lot of us just forget about. When you think on your personal side, that increase in companies now that will go into your credit card and find all your subscriptions and help you cancel them. Think about that in terms of your business expenses. If you have a contract with a vendor and it's auto-renewal and auto-pay, you can actually forget that you even have that expense. It just renews year after year. It just keeps taking the money out of your bank account, sometimes with an increase in expenses that you don't even know because you're not monitoring it. Do you have vendor insurance? Are there warranties in your contract? And again, what service levels are you paying for? If it's telecom or internet, what service levels in terms of how much data you're using or where that data can come from? Those type of issues are very common. Now look for what are you paying for? So I understand what I'm getting. I understand the contract I'm in. What am I paying for that now? I suggest to people reviewing invoices or expenses, looking at separating these standard monthly charges from the extra fees, and look for billing errors. Personally, export expenses into Excel where I can easily sort and look at each monthly bill and very quickly see, is there a difference in this month versus other months? And that might be a billing error that you wouldn't have caught. Most of things like telecom, like my personal cell phone bill, it should be the same every month. If I notice it's not the same, then I can go back and explore why that is. But reviewing those invoices, I've actually started doing that now on a monthly basis because I've unfortunately experienced some of those errors where it was too late to fix them. Now you have a great idea of what you already have in terms of here's what I'm getting, here's what my contract says I should be getting, here's what I'm paying. Now it's important to talk about what you really need. And this will vary over time. As your business changes, perhaps you grow, you change locations, you add a new service offering. What do you really need in terms of these expenses? I would suggest getting at least 3 quotes. And the hard part of this is going to be that each of those quotes is going to come to you in a little bit different fashion, calling certain things by different names. So there is a challenge there. I would say be aware of bundles. A lot of companies will say, I can get you this, but I can bundle these other 2 things in at a discount. That may seem great when you're talking the first time. All of a sudden, you're a few months into it and realize you don't use any of those other things in the bundles. Okay, well, what does the contract say about you getting out of that bundle? Or are you going to end up spending money on things that you don't really need? So be very aware of bundles. Also, be aware of your system integrations. And I'll use an example. If you are taking credit cards and you're using a CRM, if you're a service provider, you may have a specific home services CRM. You need to make sure you understand what those integrations are before you commit to that system, because many systems will lock you into their credit card processing, which means they can raise the rates and there's nothing that you can do to stop that. So make sure you understand when you're about ready to, you've gotten big enough now, I think I need a CRM or some type of ERP, some type of system that my clients can interact with me through. Make sure you understand how that back end works and all the systems it's going to integrate to and whether or not it locks you into anything specific. Also, understand if you're talking to someone who's with a company or who is a broker for a company. I think it's perfectly acceptable to ask them how they get compensated. You want to make sure that they're bringing you the best deal for your business and not just the best deal where they get the most commission. So I think it's important to understand, is it a direct sales relationship that this person has with that company, or are they brokering for multiple companies? If so, how do you know they're bringing you the best deal? Also, how do you look for a savings outside of doing the 3 quotes? A lot of professional associations offer discounts on business expenses. Something like your professional organization or your local chamber of commerce oftentimes has discounts on common business expenses. You could also get savings for using auto pay or you're doing a cash payment such as an ACH versus a credit card. Auto pay, again, be careful with the auto pay that you will forget you're even paying it, but it can save you sometimes 10% or more. Now I'm going to move into one of the areas that hits businesses of almost any size, merchant services, an incredibly complex thing. It has to be complex because MacGyver doesn't understand it, so there must be something to it. What are merchant services? It is the processing when you as a business take a credit or debit card or Apple Google Pay, or you have a gift card program, or maybe you have an online shop and you have a payment gateway where you're taking payments, or you're in person, you have a card reader point of sale system, even if you're taking food stamps. Those all are processed on the back end through what's called merchant services. Lots of parties are involved. It's a very crowded room. There are at least 6 different parties involved in every single transaction. There's the cardholder or customer. There's you as the business or the merchant. There's your bank. There's the payment processor. There's the bank that issued the cardholder their card. And then there are their card associations. So every single transaction, all of those players are going to take a little piece of the pie. Even Jackie Chan says, why are there so many numbers? Interchange rates are something you'll hear about. They are set by the card issuing bank and paid by you as the merchant. There are over 500, I think that's actually up now to maybe 700 different interchange rates, meaning the kind of card that the customer gives you. Is it a debit card? Is it a rewards card? Is it an airline points card? That can have an effect on the processing rate. Also, the transaction type. You might hear something called CNP or card not present. There is additional processing charges if it's a less secure transaction. So if the card is not present, there is going to be a different rate because they view that as a less secure transaction. Also, your business size and your industry. For some reasons, supermarkets pay more than gas stations to have their credit cards processed. And these rates are not static. Every April and October, Visa and MasterCard will have a meeting where they update these rates. And by update, I mean increase. It's just me being polite. So it's something to definitely take a look at, try to understand. Knowledge is power in this case, but it's not easy to understand. Understand what your current rate is, not just the base rate you're paying. I'll talk to small business owners and they'll say, oh, I'm only paying X. And then I will help them and look at their invoices and find out, yeah, it's X. But then there's 5 different charges each month on top of that. So make sure you understand all that you're paying. Also, take a look at how you're taking the payments. Is there a way, if your customers come in, is there a way to do more card present so you reduce your security risk? Maybe also look at cash discount programs. Cash discount programs are the things that you see sometimes in restaurants where if you pay in cash, you pay less. So essentially passing along merchant service processing charges to your customers. Does not work in every situation. I have plenty of contacts that will tell you in some industries they've had customers say, I won't do business here if you're going to now pass this cost on to me. So something to be aware of. PCI compliance really is a safety and security questionnaire that will determine if you're compliant with your security standards. If you are not compliant, you are probably being charged a monthly rate. You should know about that because the compliance is very easy to fill the form out. But a lot of people don't realize they're receiving this monthly charge. And again, back to the systems integration, very, very important to know. Telecom, another area that can be complex and hard to compare. You're looking at mobile phones. How much data are they really using? Are they using all the devices? I have business owners I've worked with who did not keep track when people left. And next thing you know, they're paying for 5, 10 or more cell phones or tablets on their bill that nobody's using. They're sitting in a drawer. Do you have insurance? Do you need insurance on your mobile devices? If you're using VoIP or a landline, are you using all of them? Are you using all your extensions and features? Do you need to be using all your features? So these are just some questions to keep in mind as you try to navigate telecom, which is another complex and ever-changing world. So at this point, I want to thank you for your attention. If you stayed with me all the way through this, particularly the merchant services part. If you have any questions, please feel free to drop me an email at robyn.bowles@schooleymitchell.com.
Great. Thank you, Robyn. I have a question or two that I want to include on the webinar here. From your experience in working with Schooley Mitchell with larger companies, but then bringing it down to, say, a company with 10 or under employees, and then maybe that solopreneur, how much can somebody expect to uncover? And I know that there's not one answer, but like a range, because I'm thinking, I've got a number in my head, and I'd love to know what you think, just with what you've outlined here, someone might find.
You know, it's really hard to pin down because it depends on size and industry, but it also depends on your starting point. I can only say with any certainty that the clients that we work with save an average of 26 to 28%. But that is also because we're negotiating those contracts. I think there's to be had there. It's just hard for me to put a number to. Let me put it this way. It's a worthwhile exercise is what I would say.
Yeah. I've got to think, I mean, it easily could run into the hundreds of dollars per month for somebody who takes an approach and has a
Yes,
couple of employees, right? Okay.
absolutely.
Okay. Well, we are going to then move on to the podcast. So for this one, I really encourage you to check out the podcast that Robyn and I are going to be recording right now. And Robyn, I want to say thank you again for putting this together, and I really appreciate it.
Thank you, Anne. Again, I appreciate the invitation to be here.
If you found this valuable and you're thinking to yourself, I need to create some video content for my business, but I'm not confident I could pull it off professionally enough. That's literally what we help people with at Pro Video Pages. No pressure, but if you want to see how we make this ridiculously simple for busy professionals, just check out the link in the description and reach out.